Here we go. Welcome to another episode of Patrick Boyle Exposed. Patrick Boyle's in the house. Brand new tie, brand new suit, brand new camera, brand new mic, brand new cactus.
Yeah.
And we got the setup. Patrick, how are you, my friend?
I am well. How are you? What's been going on?
Well, first of all, we're going through some rough patches at this moment. Um, so, I mean, have you seen what's been going on with this crazy market right now?
Yeah, it's markets are always a bit crazy. It's you should be confused if everything seems really understandable because that's when things are going to go wrong on you.
But I mean, did you have this? I had a shitty feeling before this started. When your gut feeling tells you this is getting out of hand. I mean, but I had it for a while. I'm not gonna lie to you. Did you have a kind of a premonition that? Well, you're a futures guy. You probably have seen it coming way before us, right?
No, I think, the truth is that just when things run up an awful lot, they might be ready to come off. And when things have come off a lot, they might be ready to turn. The market changes over time, and there's been a lot of froth over the last while. And so if you think about it, there's a lot of people who've bought an awful lot of stocks have done really, really well in the last 12 months, basically. And so people are up a lot on that stuff, and they look at it and they say, well, I bought a bunch of stocks that did very well when when the whole lockdown occurred. That's worked out for me. What happens if when this gets unwound? And we're seeing, like, I was looking at statistics the other day, and you're looking around the world, and there's quite a lot of people getting vaccinated. There's a lot of things like commodities are coming back. Like if you look at oil prices and so on, you're seeing all of this stuff coming back. And the people, I think, right now are probably just a little bit confused as to how best to position themselves for the coming market. And there's big questions as to, will there be inflation slash higher rates, or will there be inflation and low rates, or will there be disinflation? There's no there's a lot of confusion, and people need to reposition themselves for what they think is likely to happen, and that's why the markets are a little bit volatile right now.
I want to show something you sent me earlier today, and I think it's really interesting. So I got this chart from you earlier today, and I was blown away. I haven't seen it. I want to say in years, uh, but this thing is mind blowing. When I saw it, you remember my reaction when you sent this thing to me? I was like,
Yeah.
"Oh shit!" So do you want to explain what we're looking at here because this is pretty
Well, what
insane?
we're looking at, it's quite an interesting chart, and it shouldn't be too much of a surprise to anyone. But what it is it's the top five stocks in the S&P 500 as their overall weight within the index. Now, the S&P is a market cap weighted index, which just means that the biggest companies have the biggest weight and the smallest companies have the lightest weights. And so when we look at this, we can see that essentially what has happened here, and it happens from time to time. I think that chart is from 1980 through till present. And we're just seeing that there's an awful lot of concentration in performance within the index. And everyone was talking about this, for a few years, in truth, like leading up to the pandemic, because, there was this situation where certain companies were essentially to blame for the entire performance of the S&P. And even when you looked at American stocks compared to global stocks, you would see the S&P doing really well and the rest of the world kind of flat. Like, frankly, a lot of the world has been flat since the credit crunch, 12 years ago, 13 years ago.
Hmm.
And so a lot of the performance has been sort of what they call the FANG stocks, like Facebook, Apple, Netflix, so on. These big tech stocks, and so they have now reached a very heavy. Well, pre-pandemic, they'd reached a fairly heavy weighting within the S&P, and then the nature of the pandemic was almost, instead of there being a rotation, it turned out that what worked even better, and what was doing badly did even worse. And so you just see this explosion where suddenly companies, the kind of 5 big tech companies are right now, what are we looking at? Around 20% of the market cap. So if you're investing in an index fund, 20% of your money is in 5 stocks, is
Which
basically
is
that.
Apple, Microsoft, Amazon, Facebook,
Yeah.
and Tesla. I mean, Tesla is
Yeah.
already there, and Berkshire Hathaway, probably. Yeah, that's the point. But I mean, that goes against the whole principle of investing in an index fund at some
Well,
point, right?
it's not giving people the diversification they might hope for. It's an interesting thing because equally you're happy at this point not to have received that diversification because you've received the huge performance of those stocks. But for certain, especially if you're a risk-averse investor, that chart probably makes you a little bit nervous. It's also, kind of interesting that it has peaked at certain times, like you see it peaking there in 1999, the last time, and before that, before the bull market in the early 1980s. And so the problem with that, just to be clear, because I take a statistical view of these things, is that just because something has happened that way twice before doesn't really
Right.
imply much. But it might say to you that if you've done well out of this is as good an opportunity as any to sort of rebalance your portfolio and make sure that you are diversified.
But Patrick, is this a good predictor of the severity of the pullback we're gonna look at? Because I see the correlating years, and I see 2000. Very, I mean, it's kind of in your face, right?
Yeah.
And I see 2008, kind of nine-ish there. So is this a good predictor for a mega crash?
It's not, like, in truth, like, it's not something that I would use as a prediction. Like, for me, I mean, just basic statistics tells you want 30 observations without overlap and so on in order to come up with a good prediction. And we're kind of looking at a couple of observations in this chart. It is interesting and it tells you how diversified you are, but it doesn't, it's not really, I wouldn't say there's anything predictive in that chart. It's a descriptive chart.
So at this point, somebody here saying that they bought Tesla at 561. That's actually a good valuation for Tesla. I mean, to get into, I love Tesla. Somebody says it has a $300. I don't know if it's gonna hit $300.
I've heard there might be a takeover of 420, but that's an old story.
420 it goes private.
Yeah, funding secured.
Funded secured. SEC fine secured. um, Big tech without Tesla has become a very good defensive play.
Well, in truth, like, one point to make in relation to this chart is that if you exclude Tesla from that group, yes, those 5 stocks are very heavily weighted in the S&P, but equally they contributed, a heavy weighting of the earnings of the S&P. So it's not insane. This isn't sort of, one thing to remember, like, there are temptations to compare certain things that we see today to the late 1990s. I mean, we're in sort of another big tech boom, but you must remember how frothy things were in the late 1990s. Like, you have to remember how the internet did not work in the 1990s, and these
Yeah,
companies were worth billions. Today it
that's
works.
true.
Today they're profitable.
You know who Agent 47 is, right?
I don't.
Somebody, you're not a gamer, so
No.
you should know this, but you have to see this. And this is Agent 47.
He's got a good look,
He nailed it.
I mean, that's the only thing is I would say, like, because you're Russian and it says they're hitman. Like, I would argue that a Russian would tell you that that is not what a hitman looks like. A
No,
hitman just
they
looks
don't.
like a woman pouring you a pot of tea with polonium in it.
They put or stuff in your underwear.
Yeah, just putting some neurotoxins on your doorknob and wandering away.
Do you think the S&P is holding Tesla down? I, I I don't think I don't see.
there isn't a huge sign of excess gravity in Tesla's price in recent years. So.
Yeah, Eric likes you. we like the Patrick in this channel. And
Hello,
here, by
Eric.
the way, shout out to the 1,400 people in the chat. Thank you so much for stopping by. I mean, every time we get Patrick, it's like clickbait. Patrick brings views. We all know this. Um, so here's a good question for you, Patrick.
Wait, can I
Uh,
ask a hard question first?
no.
What happened to, like, last time I spoke to you, there was supposed to be, there was the next day you had a big guest who came on, and then suddenly that disappeared. What happened to Meet Kevin?
Oh, there was the stream with Meet Kevin. It had so much technical bugs we couldn't get it going. So basically,
Oh,
what happened is as if God was taking a dump on my stream because the internet was going in and out. We was doing it in Zoom before this new setup, and internet was in and out to the point where the stream would just die, not even buffering, and my headphones, the wireless ones, were going in and out for no reason
oh
every few
wow.
seconds. So I would not hear him, then I go back, reset my computer. So yeah, it was just it was a
Because
horrible.
I heard a rumor, and this might be untrue. In fact, allegedly, I
Mhm.
heard that,
Allegedly.
the Grant Cardone was seen outside near your phone box in the street outside your apartment. Is that true, or?
No comment. But it might have been. Um, so, Patrick, a quick question for you. So, um, somebody, Tom Nash, it sounds as if you may need an exorcist. That's always true. That's always true for me.
Yeah.
Um, so the YouTube guys did not want it. So yeah, I think so. Anyways, so thank you for bringing up my horror story with Meet Kevin. And I don't think he's ever gonna pick up my calls again. I mean, he went through a very tough hour with me. Um, and anyways, listen. Here's a question for you. Um, so at this point, I've been saying to, I mean, I've been preaching that ETFs, especially index tracking ETFs, are the best way to invest long term if you want just a stable return over the course of a decade. If you're just patient, you'll do fine. And the this is temporary, right? Every trend has a counter trade, right, Patrick? So you probably will see this flattening out over the next couple of months or years. I mean, this is, I mean, in the long term, this would probably have not a lot of effect on the performance of of the S&P, anyways,
Well,
right?
that's the thing, is that when you invest in an index like the S&P, you're investing in it's the 500 biggest publicly listed companies in the United States. And sometimes they grow. And, I'll give you an example. A few years ago, the biggest stock in the S&P up until quite recently was ExxonMobil. And it was kind of a leader for many, many years. Now it's Apple Computer. And so, no one notices a big loss in wealth because it's just that one company replaces another. And that's kind of the nature of index investing. The only, there's a few funny things about index investing because you're always buying companies after they've done well if you own an index, right? Because a company gets added to an index after it's done well. And then even it gets cut from an index after a period of underperformance and when
Yeah.
something else is bigger than it. So there is something kind of there is kind of a bit of a trend following approach associated with index investing to begin with, and to a certain extent, it has been argued. Now, I think it holds a lot of water that for a lot of investors, it does make sense not just having an S&P fund. Like if you go to the big index fund providers, they'll track a bunch of different indexes, and you can have things like emerging markets, you can have small cap, mid cap stocks, you can have value versus growth stocks, like all of the breakdowns you want. So if you want to invest in the US stock market, but you're uncomfortable, we'll say, with the fact that the five biggest stocks are so heavily weighted, there are ways of being long the market and not tied to that.
Did you see this? This is from Seeking Alpha, one of their articles. I just pulled it up on the screen. You kind of have a visual representation of how it looks like as far as the concentration on the big five. So in that article, they actually say that the quantification of the lower tier, the 250 stocks at the bottom, are just under 10%.
Yeah.
So that's like a pyramid. if you think about it.
Well, it
That's it.
is, but it's sort of the kind of the Pareto principle where usually the best it's that sort of 80-20 rule, and so you would expect to see maybe not as much concentration as this, but a certain amount. One of the things I think that's interesting a little bit about tech stocks, or at least this current crop of tech stocks, is how advertising based they are. Like if you think about Facebook, and Google in particular, like they're just big advertising companies. In a way, Amazon is more diversified and has all the cloud and whatever else in there as well. But there's a big kind of advertising component to that as well. And obviously, it becomes interesting. Like you need the overall market, you need the US economy to thrive over time for all US stocks to do well, right? Like you can't sort of have these two big advertising companies doing well and all of the companies that buy advertising not doing well. And so over time, you would expect to see greater balance. But some of this, it's just tied to a certain extent to the issues during the pandemic and to the companies that people actually used and dealt with, so
Do so in that respect, somebody I just there's a comment here I want you to look at. It's a tech bloodbath. My portfolio dipped another 5% today. Um, and I'll pull up on the screen the S&P 500, so you can clearly see it's dipping again. So I made a video on my channel, and I basically spoke about it was a deranged video, as you would expect from me, right? So there was a crazy example about a train and people spilling drinks, and I acted out the whole. It's pretty deranged. Anyways, I was talking about how bond yields is essentially a barometer for the manic depressive tendencies of the market. So if you have like a manic depressive neighbor, bond yields is how you know if he having a bad day or a good day. And
yeah,
if not specifically the rates, but more the steepness of the increase or decrease.
yeah,
um, and basically, the overreaction, FOMO, manic depressive behavior of the market pushed the entire tech sector down because people assumed higher inflation, lower interest rates, higher interest rates, lower valuations, and everybody started selling tech, including tech that makes no sense to sell in high interest, such as Apple or Facebook or Google, that makes
mm,
no sense. I mean, because they're presently extremely profitable.
yeah.
Um, so my question to you, as my resident expert on future prediction, where is this thing going? I mean, I have my theories, but I'd love to hear yours. I mean, as far as the next week, 2, 3 month, I mean, how do you see this play out?
It's a very difficult situation right now because you look at the market, and it's not an easy judgment. Like it's not sort of calm times where you can look at the market and say, oh well, it's obvious that this is just a little flutter. It's not that obvious, but I would say that to a certain extent the Federal Reserve is kind of behind the market. Like they essentially, like Powell has come out and said that he wants to keep things up to a reasonable extent. They're
Yeah,
saying that they'll let inflation run a little bit more and so on. And that possibly is reasonable in terms of if you want to sort of keep the economy afloat for a little while until things kickstart themselves quite naturally. And then the big question is just how quickly do things kick off again? And it would seem to me that there are a lot of industries that are starting to really warm up again. And as I mentioned, like if you look at the percentage of people vaccinated right now, it's around the world, it's starting to move up. Where I think I was looking the other day in the state of Massachusetts, it was over 20% of people vaccinated, and so it's reasonable to expect people to get back to doing the things that they did. And then you look at things like, we'll say, what if there's a lot of people haven't been on holiday for a while? Do they want to go on holiday again? Do they start driving their cars more? Do they return to the office? And
yeah,
so even like some of the tech bloodbath, it slightly relates to, these things did so well run up to this, that should there be a reversal, are we likely to see, we'll say, an awful lot of energy companies doing well over the next little while, and a slowdown in sort of the working from home stocks that have done well over the last year.
So I think basically the answer is I don't fucking know. Which is
But the truth is, if I can
this is my
moderate,
answer. This is my answer. I don't
yeah.
fucking know. I'll
No,
tell you.
it's hard to say, and in truth, anyone who comes on and says this is definitely going to happen is kind of just a big liar, because no one has that amazing foresight. But you have to, you know, depending on how long you're investing for, like if you're investing for the long run, you just need to pick good companies that will do well in the long run, and you should be fine. And I think most people fit into that basket. It's not there's no really obvious answer as to what'll happen next week. I mean, it's very difficult to say.
uh, just in other words, okay. So let me tell you something. I've been preaching for a while this mantra, and the mantra is do not buy stocks that you only purchase out of the expectation that the price will go up. If you don't have long term conviction about the performance of the stock, do not buy it, even if you're 100% sure that it's going to go up. Investing based on the greater fool theory, it's like investing in a pyramid scheme. You never know if you're the fool or not. And this proves my theory, but not in the way you would think. Because what's going on right now is actually proof of why this approach is true. Since I only invested in companies I have, you may think I'm an idiot, but I believe Tesla is a world changer. Palantir is the Tesla of software. I really love BNGO and BCRX for pharmaceuticals and medical stuff like that. And I have a lot of different companies like Apple, like this. I have a lot of companies that I have full confidence in. So no matter how much they dip, I was investing more in Palantir and Tesla over the past 2 weeks. I was buying more shares, not because I'm smarter than anybody else, just because I have such conviction about these companies. I really don't care. For me, it's an opportunity. But if you are there because of you got in because of the greater fool theory, and now you become a paper-handed bitch, because literally you're only there to make a quick speculative gain, and every time it drops, you don't see the opportunity. You get more. I mean, you shit more you pants. You know what I mean? Because it's getting worse for you. Now, when you're there because of conviction, every dip makes it better for you. Did you see Kathy Wood go on her? And I'm not saying she's the oracle. Okay, let's be honest. Okay, Kathy Wood, you either like her or not. We probably differ on our opinions, but I mean, she went on her podcast, which she does for Ark Invest, and she's like, "Guys, this is the most exciting times I had in the last few years, because this is literally I felt like she was describing a kid in a video game store in Christmas. You know what I mean? Everything is for sale because she believes in all of these companies. I mean, she bought up 10 million shares of Palantir from February 18th in 2 weeks. I mean, if you believe in those companies, I mean, she was actually talking about, Jerome Powell, what you just mentioned. I mean, she's like, motherfuckers, what did you expect him to say? People were like not happy with what he said on TV. I mean, she was like, what did you want him to say? He said exactly what you wanted to hear, and you've decided he's lying. What the fuck
No.
did he want from JP? I mean, he did. I mean, he was kind of arrogant, I think, to think he'll just save the day. Let me go on TV, and save everybody. And then he fucked it up. I'm sure his producer was telling Xnay on the stream, A, with you're crashing the economy, man. Just stop talking. Talk about sports. Commercial break, commercial break. But I mean, here's the thing. She actually said a really good point today, and she was like, okay, yesterday, sorry. She was like, hey, inflationary concerns based on expected growth of the market are are expected. However, she said if you take into account disruptive companies, there's a deflationary effect with disruptive companies because they cannibalize the old school companies that get left behind. So the inflation isn't going to be as bad because she said basically our innovative company will take a bite out of your companies, so it's not going to be as bad. So expecting this apocalypse of inflation it's just not realistic. She was basically saying JP is right, and people freaking out and panicking. And she, you know how she ended it? She's like, "Well, I'll happily take the other side of that trade." Sure, so
Yeah. I guess the question just is to what extent is this priced in? Because it's all very nice to kind of say these are great companies, but whenever there's sort of two components. Because in fact, the Warren Buffett idea is almost that you can invest in not in bad companies, in companies that are failing almost, but if they're cheap enough, you can still get some juice out of them. You can buy, a great company doesn't necessarily perform well in the long run if everyone already knows it's great. And so the question to me is what's priced in. And I would slightly, I'm not really sure what Cathie Wood's mandate is exactly, but I think of her as sort of just like kind of a technology sector fund. So her job is to pick the best tech stocks, I would argue, and she's happened to be in the best sector over the last 5 years. But there's other periods in which, like, gold mining stocks might be the best sector over that period. And if they do really well, you always have to balance, like, is it that this person is a genius, or were they just in the right area and pick the right stuff? Like, I by no means knocking her, because she's had phenomenal performance. But I guess the question just is, like, it's not just, is a company a good company, it's, is it priced appropriately as a good company? Like, are we likely to, because sometimes you look at certain stocks and they're good companies, but they're priced to perfection. And so the price implies that everything that they want to happen will happen going forward. And then their price is justified. And in a way, you almost need them to surprise to the upside to do well, right? Because today's price reflects today's expectations of those stocks. And we need a new expectation. We need to sort of look at them and go, oh my gosh, I never realized that Tesla could enter this totally different business and do well, and that would justify an explosive upside. But if they just do what people think they'll do, well, then they're possibly, the price may not make sense.
yeah. Uh, Mike says if tech stocks drop anymore, Kathy's gonna have to start OnlyFans. That's
Well,
a horrible.
I need to look into this, but I read an interesting thing over the weekend, and I actually need to look it up. I shouldn't even discuss it right now. But there was an interesting article that talked about how, because of the concentration of her portfolio and because she owns so much of certain stocks, that it almost becomes problematic for her buying and selling relating to regulation, because you're kind of, once you own a certain percentage of a company, you're viewed as like an insider in that company. And I think there are special SEC rules around that. I'll probably email you after this call about that topic, because it's kind of an interesting thing.
I think outside of Tesla, she doesn't own anything above 10% in any of the companies she's invested in.
Yeah.
But even Tesla right now is going to drop. With the valuation dropping, they're probably going to dip below 10% anyways.
Mm.
Um, but I think they sell every time it goes above 10%. They either have to, or it's kind of standard practice to go under 10%, so they don't go over the threshold.
Yeah, it might be. I don't know that much about ETFs, but there quite possibly might be a regulation like that. So, but yeah, I saw something where there's essentially a risk of almost being required to disgorge profits. If you're viewed as an insider at a company and you buy and it does well, you almost have to disgorge the excess returns that you gained from that. So it's, but I'd have to look that up. It's
I
an
think it's one of the. I think it's one of the reasons Ron Barron sold some of his Tesla stock. He was pretty much hinting to that he had to
interesting.
rebalance his fund.
Yeah,
Uh,
well, it also just makes sense for everyone. Like, if the truth is, you do well in the long run if you're in a diversified basket of stocks. And so if you have all of your money piled into 10 stocks that are also all in the same sector, and so,
oh, look, I got it wrong. He's right.
oh,
So the 10% I was referring to is 10% of the fund. It's not 10% of the company. She doesn't
oh,
own 10%. Okay, so I don't think they're an insider. Um,
yeah.
Ron Barron might be. I don't know. He's super early stage. Um, But yeah, that's right. That's actually true.
Mm.
10% of the company. Um, Kathy, that her fund is up 10% only, but not needed to be exact. Okay.
Okay.
Okay, got it. Okay, interesting. So, but I think there's more. If you actually talk about concentration risks, um, she has a double dip into concentration risks, but also it gives her more upside if she wins the lottery, right? So she's concentrated on the specific, on just on tech, just on innovation, and just on the like 40 companies, 50 companies, whatever she has in there right now. So it's hyper concentrated. But I mean, she's scratching a lottery ticket. She's betting. She's making a bet on innovation and tech, and
Well, that might make sense to her as a fund manager with that given mandate. Like if you are the expert in this area, it makes sense for you to have that position, and people come to you to get tech exposure. But for a regular investor out there, it possibly, you should not be putting your money into like an ARC and thinking it as being diversified like the way an actually diversified investment would be, which would have investments in all of the sectors of the economy.
so I had a Zoom call today, earlier today, with my Patreons, and somebody asked me a question. Is like, okay, which of the ARK funds I should buy as a defensive strategy against what's going on right now? And I said none. None of them is a good defensive strategy against what's going on right now. I actually spoke about DHIL. I don't know if you know them, Diamond
No.
Hill. So they kind of the anti Kathy Wood, not anti like against her, but they're basically very heavy on everything that's kind of old school. Pepsi, Abbott, like Disney, like hardcore, like value cash rich businesses. And there's a lot of funds that are kind of correlated -1 versus Kathy, like old school industries. Berkshire Hathaway is one
Yeah.
of them as well. I mean, there's a lot of defensive investments you can make that are aggregated, diversified. So it's you don't need a lot of, it's not rocket science. There's a lot of
Yeah.
stuff
Well,
you can.
when people talk about defensive stocks, they mean a stock that will do well and doesn't require the economy to boom. So we'll say, for example, like company traditionally things like drugstores like CVS. Like if people are wealthy or if they're poor, they spend about the same at
Yeah.
on medicines and on certain things, and so if you are trying to put together a defensive portfolio, you need to look for non-economically sensitive stocks, is essentially it.
Um, so here's the thing. So what are your thoughts about? It's funny we have such a good chemistry, even though we don't agree on nothing, pretty much. So, um, what are your thoughts on what I'm about to tell you right now? So I have this theory, right, about my theory about reopening recovery, and I don't believe in full recovery. I feel this hybrid society is gonna take over new patterns. Everything is gonna be kind of.
Yeah.
Anyways, you heard me talk about it. So, based on that, I think that if you want to invest in individual portfolios, individual companies, so to speak, right? Recovery stocks, I think the best way is to find these recovery stocks that are geared towards this new economy, the economy 2.0 post COVID. So, cybersecurity, e-payments, anything in digital payments. Um, Even I spoke about Disney as a recovery stock. People are laughing at me. Think of Disney is one of the craziest stories. So much they took such a big hit because of the physical assets, and now they're really primed to take over the streaming market. Plus, the physical assets will go back to work. So Disney is going to be another good investment in that sense. Um, but I'm not buying any airlines or hotels or none of this nonsense because I mean, think about it this way: you manage a company, right? Let's say, and so I used to be a CFO of a company. So let's say that your CFO comes to you and says, "Hey, listen, Patrick, we saved $1 gazillion this year on airfare. Um, we did all the meetings in Zoom. I mean, do you want to go back to spending $1 gazillion per year again, or should we just keep doing these board meetings and fucking things in Zoom and let's just have one annual meeting where we just face to face. What do you
Well,
think that
I
any
think that's a good point in that I think there are many things that will change because there were certain things that were possibly happening anyhow, and people chose to, just to go with the old way because it was standard. And so people won't necessarily go back to everything because even like, who goes on cruises? Like it's sort of, it's the elderly who go on cruises. I can't think of anyone under the age of 60 that would want to go on a boat trip at all. But other than obviously on a yacht, but not on a cruise ship. But the
I feel the concept is preposterous in general, cruise ships
well,
in
I think
general.
there's a lot of things that people will choose not to do, but in the real world, the United States economy is kind of a service economy, and it's a lot of the jobs, back when people were talking about outsourcing and how everything would be outsourced, and it was realized that there's only so much that can be outsourced simply because an awful lot of the economy is sort of personal services where people are dealing with people. And so that sort of thing will come back. I do think companies, there is some sense to doing more meetings in this sort of Zoom format, because I think there were a lot of older people who almost didn't understand that like video chatting existed, and now they do. But equally, if you talk to a salesperson, they kind of want to get to meetings in person because when people talk to people and they get on with people and they go out for drinks and they become friends with each other, then it's easier to deal with them. And I'm reminded there was a friend of mine who joked, I guess a couple of years ago. You remember the Swedish girl Greta who took a boat over to speak at
Yeah, yeah,
the conference? It was a
yeah,
big
yeah.
deal. She took this boat. And the problem is that the fact that she took a boat and didn't video conference in actually tells you a lot, because she realized that being there in person has more impact than appearing on a screen. And this is why, like, our salespeople or our business people traveling because they like staying in hotels and attending conferences. That's not why they're going. They're going because it's good for business, and things that are good for business will come back. But equally, there are certain things like even certain styles of, you look at, we'll say even in Asia, like people have been wearing masks for over a decade simply because of the SARS, over
Yeah.
10 years ago. And that idea stuck. And I think, I must admit, like, I wouldn't be overly excited about like commuting in and out of work on an underground train in London or in New York right now. And even post-virus, you'd kind of look around and you sort of go, this is just a dirty place to begin with. And so maybe there are certain things that people did kind of against their will that they'll no longer do after this. But there's an awful lot of jobs that are just ill-suited to working from home. Like, sort of paperwork jobs can be done from home. A lot of other jobs just can't.
So as George just said, again, the topic we disagree on. But you're such an Irish guy, in your I mean it's you I mean Irish people, you guys have the ability to have a debate, uh, telling me to my face that you think I'm wrong, but doing it with English manners, so I don't feel so butt fucked. um, Listen, time will tell which one of us is right about it.
Mhm.
Um, I think that um, it it's a numbers game. Okay, you're talking about this concept, and I hear your point, and I think it makes a lot of sense. But bottom line is key. It's the W, right? So if you can save office space, parking, you can save time. They work 2 more hours per day. They don't have to commute. You
Yeah.
save airfare, and these guys, they don't fly coach, but you know that they fly
Yeah.
like all those business flights. They cost money, and then you have the expense accounts on the travel, the hotels. What It's a lot of money,
Yeah.
and that I think at the end of the day, it's going to be very hard for CEOs to justify going forward with everything that's going
No,
on
I'm
right
I'm
now.
totally with you. I think there will be a big reduction in kind of non-essential travel, but equally essential travel will come back. And maybe even people will possibly, the airline seats have been getting smaller and smaller over time. Maybe people have grown tired of that. In truth, the airline industry has never been a great investment. Like I've
That's
never
true.
really seen people make a fortune there. It's a boom and bust industry to begin with. But I think there are many businesses that have suffered over this period that will not suffer going forward. Like there will be a return to just more normal things like bars and restaurants, for example. Like I think most people are frankly gagging to get out and go and have a bit of fun going forward. And maybe they won't go to a cruise ship, but they'll do something else that involves getting out. And actually, a funny thing, have you seen? It was all over Twitter in the last few days. There was a commercial for Suit Supply, the suit company, and they've got this. It's worth googling it. They've got this new ad saying, things are about to get back to normal, and it's basically an orgy of people writhing together on the floor in the commercial. Of course, it brought a load of scandal, which will have been the goal of the advert. But I do think that people possibly at this point have had enough of being locked up in their
Oh, I
home.
cannot play it on stream. We're gonna get demonetized, potentially banned. Um, but I want to show you something else. Did you see the Cadillac commercial?
No,
And with Will Ferrell?
no, I haven't seen that. No.
Okay, so we'll play that for you, and then we'll take some questions. Um, it's actually pretty old, but it's you as an Irishman you'd appreciate it. Um, okay, how do we share this? Okay, again, oh, I suck at this. uh, wait, how can I share? Uh okay, I just figured something out. When you share screen here, okay, you have to in advance define you want sound.
Ah,
Um, okay, share audio. Here we go. Okay, now we're Gucci. Here we go. You hear this, right?
oh, I hear. Yeah.
We just gave him a free commercial.
Did you know that Norway sells way more electric cars per capita than the US? Norway. Well, I won't stand for it. Come on. Never mind. With GM's new Ultium battery, we're gonna crush those losers. Crush them! Let's go, America. Keenan, Norway's out EVing us. Wait, what's this?
Oh, it's my daughter's birthday. She's really into pirates
I don't
lately.
care. Grab an EV, meet me in Norway.
Okay, can I say goodbye to my family?
Nope.
All right.
Aquafina, sorry to disturb you, but Norway's beating us at EVs.
Nuh-uh.
Uh-huh.
Nuh-uh.
Uh-huh. Meet me there in an hour.
Can I ride with you?
No! GM's Ultium battery is made for all types of vehicles, so soon everyone can drive.
Anyways, so it's funny how these commercials show you a lot of the trends. Everybody's running towards this. I think that kind of that's a Super Bowl ad.
Yeah.
So think about the spend on this thing. I mean, think about the budget as far as getting the A-listers. I mean, they paid a lot to put EV and Cadillac together in the same sense, right? So that kind of shows me that maybe Kathy, what is right? I mean, look at this. This ain't some a cockamamie fleeting trend. I mean, Tesla is literally, and notice how they don't mention Tesla in that commercial in Norway. It's like,
Yeah.
I mean, Tesla has forced their hand to change, and they're changing essentially into the home court of Tesla, where Tesla already is 20 points up. The game is starting with, you know what I mean? So I like how she's thinking about this, because if you can get over the fact that Cadillac, have just put out insane that sounds 15 years ago.
Yeah.
I mean, Ford and GM used to send the worst people to the electric vehicle department. So the guys they couldn't fire because of the severance pay, just go to the electric vehicles department. And now they're pushing that so hard. I mean, so
Yeah.
we'll see what happens. I don't know. Let's take some questions from the chat.
Yeah.
Guys, Patrick is here for literally just if we have 5 more minutes.
Yeah,
Patrick,
like 5 minutes. Yeah.
5 minutes, guys. So rapid fire. So first question for me, Tom, will you get a Neuralink implanted? Of course, you don't have to answer.
Already done. That's what the headphones are covering.
It's a Russian Neuralink. It's a knockoff. It's called Vladimir Link. Uh, um, okay, so first question, rapid fire, 30 seconds. Thoughts on Apple? That's for you.
I mean, it looks like a good company to me. I've always been more of a BlackBerry person, but as Tom points out, I am out of date.
I have a question for you. A question from Tom before we go to the. Okay, a few more questions, then I'll ask you my question. Microsoft, any thoughts?
I guess the truth is I'm not a great single stock guy. Like I trade sort of futures and in particular kind of index futures. So
Oh, look! This Tom's name Vlad confirmed. It's like when they thought I was Larry. Another joke. Sputlink. It's actually pretty good.
yeah, it's a good name.
Blatlink. You know what? I don't want to say what blat is in Russian. It's not a good word. So wait. Okay. Boom. Good question for you. Macro trends. How long does this still? I mean, I think the question is how long does this tech sell-off continues? Of course, you're not clairvoyant, but your thoughts.
The thing is, these things are highly valued at the moment. They could come down and still, not be obviously cheap. It's kind of all about your holding period, and to a certain extent, as Tom kind of said, if you like these stocks, if you feel they've got a strong future, unless you're changing your mind about that, like if you think they're actually bad companies at this point, well, then it doesn't work. If you do believe in them, you probably will only make mistakes by checking them too frequently,
Yeah.
because we just get driven to overtrade when we look at the prices too much.
They're asking about your OnlyFans account. Is it public already? You still
Not
under
yet.
construction? Under construction. Question from me. Okay, here's a question for you, Patrick. You love this question. Rambo or Rocky?
Rambo.
Really?
He just
Rambo
has
from
better stuff, he's got like
no, but if you okay, I'll give my rebuttal. Rambo, but just First Blood Rambo, not the other Rambos.
Right. Yeah, I
For-
don't differentiate. It's kind of like I think of Star Wars and Star Trek as all the one film, so
Dude, did you see First Blood? The actual
I think I did, but I would have been
it's a
about 8
good
years
it's
old
it's
at
in
the
the
time.
like
Yeah.
if you on a standalone basis, it's a really good film with a lot
Is
of
it
like
as good as Commando with Arnold Schwarzenegger though?
not as good as Commando. Thank you for the €5 donation, Mehak. I see where's WTS. It's a tough question. Any semiconductor company is probably a smart investment in this and in this environment. Everything is going digital. So somebody's asking for Colombian stock tips. Tom or Jerry? Definitely Jerry. Okay, so here's a question for you. Before you sign off, 1 minute, Patrick. So we heard Janet Yellen, I'm not a fan of, I'll disclaim, saying some dumb shit. It's a professional term. So she's been saying that she's considering taxing unrealized capital gains in the US.
It's just a bad idea because a lot of people, I think this sounds appropriate to some people, but the problem with this is that you're then forcing people to sell their companies, right? Like because and that that tends not to work out awfully well over history. Like a lot of the kind of wealthy people that you look at, the reason they're wealthy is that they've got all their money in one thing, which has done quite well. And if you're going to disincentivize that, like, Elon would have just cashed his paycheck after PayPal and been, partying for the last 20 years,
But essentially, that would turn all of us into day traders because we don't have the cash to pay the taxes. If
No,
it's
but and also like people just selling down anything that did well. It almost has a muting effect on the economy. Like you want things to be able to run. It's good for the world when new things come out and they take off, and when people do well out of that, it encourages other people to join in and to do similar things. It encourages innovation.
I was expecting them to come in and say, "Hey, we need." Okay, it's like the Oscars, when somebody talks too long. There's the music. Get off the stage, motherfucker. Uh, I was expecting them to go and say, "Hey, capital gains tax needs to go up," because I mean, I think it's a moronic claim because tax collections don't go up when you raise taxes. You actually inhibit growth. Different discussion for a different video. I did not expect them to imply about unrealized capital gains tax, which is moronicy. However,
Yeah.
since we're out of
But
time,
also there's everyone, like if you own a house, your grandparents who bought a house and it's now worth 10 times what it was worth, do they have to sell that in order to pay a tax bill? And is that fair is kind of the question.
well, obviously the answer is that we agree. At least we found something we agree on, Patrick. First time in ever. Listen, I'm gonna let you go since you're in a hurry. We're
Yeah.
gonna finish the stream right here. Please spam Patrick's account with subscribes and bells. I'm gonna put the link to channels Patrick here. This is the link to channels Patrick. Go and subscribe. Spam his social media with requests to do a podcast with me once a week. I've been trying to get him to do it. Patrick, thank you so much for stopping by. Appreciate
Yeah,
it.
it's always fun.
It's pleasure as always. Spam him like crazy about the podcast. Let's do it. Let's make it happen. Patrick, thank you so much. We'll see you in the next stream, hopefully quite
Talk
soon.
to you later. Bye.
Later.